And then the follow-up to that was, then there's an energy crisis in the U.S. Around electricity and natural gas, and a variety of folks were making significant sums of money. This is a year, 18 months later. And Warren's follow-up question a couple of years later to me was, and I knew it was more just checking or testing, so how much money are we making during this energy crisis? Are we making a lot? Are the speculative positions in place, and are we making it? And the answer was, we're really not making any more today than we would have been 6 months ago, because all those derivatives were truly to support our business and weren't speculative. So just that focus on understanding the business of what he was acquiring, understanding the risks around it, still stand out in my mind. Warren?
Yeah, it's that's one thing we've really never talked about here, but I spend more time looking at balance sheets than I do income statements. And Wall Street really doesn't pay much attention to balance sheets, but I like to look at balance sheets over an 8 or 10 year period before I even look at the income account, because there are certain things that's harder to hide or play games with on the balance sheet than you can with the income statement. And yeah, I mean, neither one gives you the total answer on anything, but you still ought to understand what the figures are saying, and what they don't say, and what they can't say, and what the management will like them to say that the auditors wouldn't like them to say. And I mean, there's just a lot to be learned, and you do learn more. You learn more from balance sheets, in my view, than most people give them credit for. In terms of, I really haven't. I'm not worried about being remembered about that. People don't remember. Well, they don't remember enough about Katharine Graham, for example, in terms of this story that shaped America in many ways. Certainly, it had just all kinds of impact. And I think, history is so fascinating. And Charlie was probably the best person you could imagine in what he learned. Charlie was never satisfied with just superficial things about any subject. He really wanted to understand it. And he always would tell me that, don't take a position on anything until you can describe the arguments against it better than the person who is arguing with you. That you should be able to argue their case better than they can. He was a remarkable teacher, and but so were those other fellows I mentioned. I've had and of course my dad was an incredible teacher. So you make the most of the people you meet that are going to make you a better person, and probably forget about the rest to quite an extent. Okay, let's move on to Becky, you're next.
This question comes from David Rubin, a shareholder from Scottsdale, Arizona. It's a question for Greg. We've heard over the decades and are familiar with Warren and Charlie's investment thesis and their circle of competence. During the first 10 years after taking over as CEO, Greg will be tasked with allocating more capital during that time than Berkshire has had to allocate in its history. Given this, I'd like to hear from Greg about his views on capital allocation, particularly into new businesses.
Sure. So, this bar is not too high. But very fortunate when you think of Berkshire, again, and we've talked about this, where we start from, and I'll clearly touch on the investment and the related investment allocation, but we start from a great place where we've got a a great culture within the business. We have values that we, as a management team, and really, as defined by Warren and those Charlie and everybody associated with the business, we've got great values that really set Berkshire up well for the future. And obviously, as we deploy capital and allocate capital, it's critical to Berkshire as we go forward, and equally it's around managing risk. But when I think of our values, there are a couple that are absolutely critical. One, will maintain the reputation of Berkshire and that of our company, and I view that in investing or how we operate things across each of our businesses. That will always be a priority and something that will ensure is in the forefront of our minds. I think equally, as we then look at our back to Warren's balance sheet comment, we will have a fortress of a balance sheet. And we want to, I thought Sue Decker, our lead director, said it well yesterday. We've got a significant set of cash right now, but it's an enormous asset to have that. And that will continue to be a philosophy. Yes, when we can deploy it, we'll deploy it well, and I'll come to that. But equally, we do recognize it as a strategic asset. And it allows us to weather the difficult times and at the same and not be dependent on anybody. So again, that will be an investment philosophy. We will remain Berkshire, and we will never be dependent on a bank or some other party for Berkshire to be successful. Thank you. I would then move to touch on allocation of capital will be absolutely critical, but with that comes management of risk and understanding risk, and that falls upon all our managers, insurance, non-insurance, but we'll bring that across Berkshire. And then the other value I would touch on, but that really relates to where I'm going, is ultimately we have a great set of operating companies that do produce significant cash flows, be it in the insurance companies creating float or our various non-insurance companies producing significant cash flows on an annual basis. We intend to continue to ensure that's the strength of Berkshire as we go forward. And it's absolutely critical to our long-term success. Now, with those cash flows and with the float, and then equally as touched on, we have significant resources already on our balance sheet. We'll really continue to move forward with a very similar philosophy, or it's an identical philosophy to what we've had currently and for the past 60 years. We'll start by looking at those opportunities within our business, and by that I mean within our insurance, non-insurance businesses. Are they properly capitalized and have the opportunity to manage their business? And that will continue to exist. They'll operate in an autonomous way, but in the end, Berkshire still manages the capital that will go into those businesses, or what potentially will come out of those businesses. Equally, the next opportunity is to acquire businesses in their totality, or 100%. And there are great times when we can do that. Warren touched on, we had one that was interesting in the last quarter, the $10 billion acquisition. But again, the value relative to the risks have to be right. And if it's right, we want to own it. If it's not the time, there'll be another time to own assets like that. And then there's the opportunity to own pieces of companies through the equity. But as Warren's always highlighted, and again, this will be our approach to how we think around those companies, though we own a piece of a company. We own a piece of that cash flow. We own a piece of their balance sheet. It's not just a share certificate. And as we approach that, and really we'll approach it with the thought that we're going to own this company for the long term. It's again understanding what, be it the 100% company or the 1% company, do we thoroughly understand and thoroughly do we have a strong view of what those economic prospects of those companies will look like? And Warren said it earlier, 5 years from now, 10 years from now, 20 years from now. If we don't have a view of that, we won't be investing, be it 100% or 2% of a company through equities. We have to thoroughly understand what those prospects look like, and associated with understanding those prospects, we need to understand the underlying risk of the businesses. And it's really the investment philosophy and how Warren and the team have allocated capital for the past 60 years, really it will not change, and it's the approach we'll take as we go forward. Warren?
Yeah, and I don't want to go on too long on this, but
sorry, I covered it.
No, but this is important because it's very obvious that the country, for example, needs an incredible improvement, rethinking, redirection, even to some extent, in the grid. I mean, we've outgrown what would be the model that America should have, and in a sense, it's a problem, something akin to the interstate highway system, where you needed the power of the government really to get things done, because it doesn't work so well when you get 48 or 50 jurisdictions that each has their own way of thinking about things. And of course, in World War II, we called in people at $1 an hour, and we knew we had to turn out ships like crazy, and we knew that we had to convert Ford Motor from being a car manufacturer into an aircraft manufacturer in a matter of days, not weeks, not months. So you need that. There are certain really major investment situations where we have capital like nobody else has in the private system. We have particular know-how in the whole generation and transmission arena. The country's going to need it, but we have to figure out a way that makes sense from the standpoint of the government, from the standpoint of the public, and from the standpoint of Berkshire. And we haven't figured that out yet. I don't know whether Greg wants to even explain a few of the major problems, but that is a clear and present use of hundreds of billions of dollars. And you have people that set up funds and say, they're getting paid for just assembling stuff, but that's not the way to handle it. The way to handle it is to have some kind of a government, private industry cooperation, similar to what you do in a war. And I don't think when they were doing the highway system, I don't think that the government set up its own guys that were going to pour a whole cement or anything like that, but you needed a cooperation, and we're at that point, I think, in terms of energy. But I don't think we've made any progress, particularly though. Tell us more about that, Mary.